You gotta be flipping my flapjacks. Look at these moves out here, ladies and gentlemen. Crude oil is up 10% today. The VIX is up about 10% today. GSG, the commodity index, is exploding higher, almost a 5% move. We got to talk about what's going on in the market, a bunch of stocks here at the top of the video. Once we get done going through that, I made some big moves out here today. I'll tell you what those moves are, why I went ahead and did those. And then after we get done going through that, the third thing we're going to get into today is I want to react to this video to buy the dip or to not buy the dip, okay? We got a lot to go through. All I need from you guys, if you could just quickly smash that little like button, hit that little thumbs up icon, that would mean the world to me. Make sure you subscribe to here to the channel additionally, okay? Alrighty, guys, so let's get rolling here right off the bat. Crude oil, guys, look at this 5-day. Look at this 5-day. You never see this. Never. Like, this is like, woo! I highly doubt anybody's watching us right now that has been through a market where crude oil went up 23% in 5 days. I'm sure it's probably happened at some point in time, but this is not something that regularly happens. This almost never happens. And I mean, the Middle East always has drama, but when the drama gets stepped up, oil price goes crazy. And that's still like this to this day. I mean, unbelievable move, 23% in 5 days. But I want to show you the scariest chart of all charts in the stock market. This one is downright frightening. Look at this. And a lot of you guys might not know this unless you've been watching my channel religiously for a long time. Then you do know what this is, but this is going to be scary. GSG. Look at a year to date for GSG. This is a commodity basket, the commodity index. It's up 28.5%. That's devastating. That means basically what's coming down the pipe here is a lot of inflation. Prices are just going to go up because, I mean, you know, it's as simple as that, right? And crude oil is a huge component of that. Gas prices are already exploding all over the United States of America right now. Whew, I mean, it's going to get a lot worse, too, over the next few weeks. So we're going to be basically in a situation where people are going to be paying, my guess is somewhere between 50 cents and 70 cents per gallon more next week than they paid last week. Yeah, yes. Like just in a 2-week gap, what they're going to be paying next week versus what they paid last week. We're talking 50 to 70 cents per gallon additional. That's not a small amount. That's a huge number there, right? You don't usually see, and as somebody that used to work in that industry, like, you know, when it came to like gas stations and management and all that, right? Like you don't really see a 50 to 70 cent jump in a 2-week span almost ever. Even 15, 20 cents is pretty big. But 50, 70 cent jump, oh my gosh, that's insane. So basically gas stations are just going to be raising their price like insane right now, right? So that's going on out there. Put to call ratio, I was talking to my private stock group about this here today. By the way, if you ever want to apply to join my private stock group, get all those exclusive videos, course curriculums, Discord chat access, 1000X access, I'll have that as a pinned comment down there today. You can apply to join us in there. But I was talking with my private group about a few things. One is I was talking to them about put to call ratio. There's something you guys might want to track, and it just kind of lets you know, are people freaking out? Are they buying a lot of put options or not, right? Now, usually people are late to the game when it comes to put to call ratio, and they start buying put options when it's already too late. I'll give you a really good example of this, right? Look at put to call ratio and how crazy it went here back in April, right? Put to call ratio goes insane. Insane, by the way, for put to call ratio goes over 1. High is anything above 0.8. Very high is anything above 0.9, and then like insane is anything above 1, essentially. Okay, because like usually people should be buying more call options. The market goes up usually, so people should be always buying more call options, put options. So when it goes over 1, you're just like everybody's loading up on puts. But look at this, everybody's loading up on puts in April, right? This is late to the game. Bunch of late to the game people. The market was already was already bottoming sometime around April 10th, April 12th, somewhere around there, right? Let's pull up a 1 year here of the NASDAQ. So NASDAQ bottoms right here, April 8th. Meanwhile, people are still loading up on puts. They just started really loading up on puts like the previous week and then kept loading up on puts. Meanwhile, the market's already bottoming and moving up. late to the game. So keep that in mind. Usually people are late when it comes to buying put options. They don't really see it in the future. So if you ever see that put to call ratio go really high, just know you're probably at the bottom rather than a top situation. IGV is actually moving up here today. That's extraordinary because, IGV has been so weak, like incredibly weak, but it has clearly bottomed and it's moving up. And this is despite the market just being so weak, right? We're looking at a NASDAQ that I believe is now down over 6% from all-time highs. No, not quite. Close. It's close to down 6% from all-time highs, but it looks like it's not quite there in regards to that. TLT also down, which is interesting here today. S&P 500 down about 1%. Dow Jones Industrial Average down. 520 points. Oh my gosh. Wow. Russell down about 2%. Bitcoin down. Ethereum down. And those have actually held decent. Look at what in the world's going on here. The planet's up a bunch today. Oh, you know what it is? Gas prices are up. And they think that gas is that gas, but this is a different type of gas, okay? But planet's up. TSLZ obviously appreciating here today. That hedge is done pretty well. ServiceNow, look at ServiceNow. Man, is that stock strong. Oh my gosh, like that stock was so weak. On a 5-day, it's up 14%. This one bottomed recently here, kind of around when the IGV bottomed. And from that bottom, it's already up 18%. Yeah, nice 3% move there for now. Palantir's holding strong, and that really is on the back of one, IGV doing better, right? Palantir can kind of get grouped into a lot of those SaaS-ish type companies. But additionally, they're obviously a defense play, right? And so people are buying Palantir for both of those reasons right now. And that's why that stock's actually seeing decent momentum right now. AMD is actually a surprising one. That one's green here today because you would just assume, given the move down for the NASDAQ down about 1%, you would assume AMD would be down, right? But that one's holding up well. Elf on a Shelf's a great buy right now. Anything under 100 on Elf's a great buy. Revolve's also a great buy, 25 on that one. Such a great income statement, balance sheet. No one talks about that stock really other than me, but it is a tremendous stock. Adobe is a great buy here today. Amazon's always a buy if you're a long-term investor. Keep in mind, short-term's volatile in regards to that. Celsius Holdings. Listen, I like this stock a lot. It's a big position for me in the public account. And this is a position that I added to literally today in one of my portfolios. So, if not two of my portfolios, actually. I listened to a conference call. I never got to listen to a conference call when it first came out, so I listened to it last night on 1000xstocks.com. And great conference call in regards to the integration of the Pepsi distribution network with Alani, with Rockstar. So, and also talking about margin profile going up from kind of 47%-ish range to they're talking about in very short term, like as in the next few quarters, they should be able to get it to low 50s. In longer term, they're aiming for mid 50s in regards to gross margins on this company. So Celsius, I really like what's going on there. Really like it. And that's one of those stocks. Listen, man, sometimes you need a stock that you just don't have to stress over. Right? Now, if you're somebody that gets stressed because stock prices go up or down, you got to do some soul searching. You might not be right for this game, okay, if that stresses you out. A stock like Celsius, think about the business model. They sell energy drinks. They're not going to magically be disrupted by AI, right? Okay, stuff's going on in the Middle East, oil prices are going up. Okay, so that could cause, short-term gas prices go up, which causes short-term, potentially more money to transport your stuff around the United States, right? Or whatever. It's all short-term stuff. The bottom line is you're building a brand that hopefully is around 10, 20, 30, 40, 50 years from now, right? And that's what you're trying to do when you're a drink company. You think about Monster, you think about Red Bull. I mean, those companies have been around since, Red Bull really the 90s, and then Monster since about 2002. And those brands are as prevalent as you've ever seen. And so Celsius is obviously trying to do that with Celsius, Alani. Now they also have the Rockstar brand as well. And it's just an easy hold for the long term. Sometimes you just need some anti-stress stocks, and Celsius is that. In terms of stock price, Celsius is crazy. That's a crazy stock. Like, let me pull up a 1 year of Celsius stock. Look at this. This stock was all the way down to $25. This is just in the past year, right? $25. It has been as high as $64. Today it's $43. So it's a drama show in terms of the stock price, but the business model is actually not a drama show. They just execute. Nike's a great buy right now, 57. PayPal, we talked about that one a lot recently. Meta's just floundering. Everybody wants to see the depreciation numbers. We'll see those over the next few quarters. American Express, a great buy right now. Amex around 300, or especially if you can get it below 300, steal deal. Wynn Resort's a good buy, but if it goes under 100, that's a great buy. Estee Lauder, anything under 100 for Estee Lauder. EL's a great buy as well. Cheesecake, $60. That's always a great buy as well. I like Honest as well, $2.82 here today. Honest still is a $2 chuck. Anything you can get in the $2 chuck range is a deal for that one. As far as retail trader investor type stocks, a little red, but they're not actually holding up decent. I mean, those stocks have already been devastated. That's the thing. They've already been devastated. Looking at the big tech watch list here today, MU is getting hit the worst of everybody, and ServiceNow is the best. ServiceNow, SaaS-related stocks. My possible buys watch list, looking at this one. Bath and Body Works, this is one, obviously they got to transport a lot of soaps, lotions, and candles all over the place, and that one is getting hit hard. Because it's worries about that could affect your margins negative in the short term, but all that stuff is here today, gone tomorrow. Gas price went up a lot. Like, 6 months from now, gas price could be down big, or 12 months from now, or 2 years from now. Like, this is here today, gone tomorrow, right? Companies stay, they last. But look at Bath and Body Works. Forward P on the stock in the 7 range. Geez, it's pretty darn cheap, right? It's hard to get, if you buy Bath and Body Works today at 20, it's hard to get hurt on the stock over the next 2-3 years. All things are possible, right? But I think that's a hard stock to get hurt in over the next 2 or 3 years. Now, we could debate on how much upside is it. Is it go to 25? Does it go to 30? Does it go to 40 over the next, 2-3 years? That's debatable. But in terms of getting hurt for the next 2 or 3 years, yeah. Fubo, that one just continues to flounder. Everybody's just waiting on, numbers in, more data in relation to the company and where they're headed. RH down to 145. I'm very intrigued. RH. Keep going down all the way to Chinatown. That's one that, gas prices going up this much definitely very negatively affects RH. There's no debating that, right? I mean, this is a company that has to transport massive things all across the world. No bueno. No bueno. Yeah, their furniture is big and heavy. Sheesh. So, yeah. Whirlpool's under 60. This is another company that has to transport very large things all over the world, right? Washers and dryers and refrigerators and ovens and all that stuff. So that one's under 60. Definitely has me very intrigued. I don't know, man. I might come in and start a position in these stocks next month. I might. I'm seriously considering it. They are beaten down to a pulp. So I might come in and start a position in those 2 stocks. I hope you guys enjoy all this stock talk, by the way. Robinhood, 78. Intriguing. I mean, not really a stock I want to buy, but I got to say, it's not bad. Priced under 80. Hims is 15. That one's kind of interesting to me. Oh, I like Celsius at 42. Oh, yeah. And then a lot of these are kind of the normal suspects there. Housing stocks here today. Ooh, a lot of these stocks are getting hit big. Commodities going up the way they are. It's just not an ideal situation for housing related, right? Okay, so that wraps up that there. Okay, so now let's talk about stock I sold today, or a position I sold today. Let's talk about the big buys I went ahead and did, okay? So let me show you a little something here, okay? So this is one of my TSLZ positions, a batch of shares I have in the public account. I have 2 batches in there, and this is one of those batches. This one I bought February 11th, so less than a month ago, made 12% on it, and I said, I'm out of this one here today. Now, the rest of my TSLZ, which is about probably a little less than a $50,000 position, I'm going to hold those for now. That batch, I'm kind of looking at if the Qs go down 10% or more, from all-time highs, and right now we're around a 6%. Keep that in mind. I'll likely get out of the rest of that TSLZ. I'm not holding that for like a 20% downside in the market or 30%, although those things are possible. I'm just not holding it for that. If I can get 10% there, I'm good. I'm good in regards to that. So I sold this entire batch here today, which gave me proceeds of about $38,000 roughly. And so what I ended up doing here today, here's a whole public account, by the way. And I posted this inside my private stock group. Once again, if you want to track my moves each week as well, you get access to that inside my private stock group. That will be pinned comment down there to apply to join us in there. But take a peek. I bought a big batch of American Express here today. Big batch. Yeah. I like Amex. I could add Amex this whole year. No joke. I could build Amex into a multi-$100,000 position. I love that company for the long term. That's an anti-stress stock. As far as the stock price goes in the short term, who knows? Like, it's going to be what it's going to be. But as far as the company, it's so anti-stress. Amex, are you kidding me? Are you kidding me? Such an anti-stress stock. I mean, just a great business model. Just such a strong moat around the company. Like, I love this company. I really do. I want to build this into a big position. There's certain companies you can just build into a big position. Just hold it for the next 5, 10, 15 years. Nike's another one of those, right? Which brings me to Nike. Nike is another one I bought heavy here today. I know this one's so out of favor. No one wants to own Nike stock right now. But I think they're going to be just fine over the next 5, 10, 15 years. And that's another one of those stocks that I can just hold for the long term. I think it's going to be a great money maker for me. I think it will pay me out tons of dividends. I think the stock price will appreciate greatly over the next 5, 10 years. And it's going to be a good story. So that's bottom line in regards to that. I also bought some Honest here today. So increased my Honest position overall. So yeah, I mean, we got a lot of bangers in this portfolio. Meta up 558%. AMD up 77%. Amazon up 52%. That's nothing too crazy. Salesforce is now green for us. Cheesecake Factory, remember, this doesn't even include dividends received for these stocks. That stock's up almost 50%. Celsius up 74%. Estee Lauder's decent, 34%. Palantir's up 2,000%. ServiceNow is already up 21% for us in here. 21%. That one's flying. SoFi's up 124%. Elf's up 1,000%. Google McDougal's up 90%. Revolve's up 130%. Yeah, I think we'll be just fine. I think we will be just fine in the end, right? Like, the short term on the stock market is what the short term is. It's drama show, but you got to stay focused on great companies. These sorts of stocks, I think, are going to be great money makers for me over the coming years. They're so out of favor right now. Stocks like Nike, stocks like American Express, even a stock like Honest, I think they're going to make me huge money over the next few years. I could be wrong. That's fine. That's the cost of doing business. I think I'll end up being right, just like I am much of the time. And that'll be that. As far as the tax man loves me. Look at this. Look at this. We're in early March. I've already taken $355,000 of gains in the public count in 2026. Oh my gosh. And this is coming off of last year was $500,000, $600,000 in profits taken in the public count. Oh man. Oh, does a tax man love me? Oh yeah, they make some money. Okay, let's go ahead and react to this video on to buy the dip or not buy the dip.
I think the central question remains whether to buy the dip or not, because these moments, as we know, they cause volatility.
It's funny, this is from yesterday. The crude was at 79, now it's at 89, just like that. One day later, oh my gosh, not even 24 hours later.
We know that. They often don't cause worse, okay? So I would suggest that these moments can be, for many, paralyzing. They can also be opportunistic. What do you think?
I think, what's your time horizon, right? I think that's what investors need to ask, what your time horizon. And buy the dip, it's like we have so many sectors to buy the dip. Do you want to buy software dip? Do you want to buy financial dip? Do you want to buy the Korean dip, private credit dip? And so there's a lot of opportunity.
Korean dip, no. Private credit dip, no. Financials dip, no. SaaS dip, oh yeah.
Whereas the S&P is still flat for the year. I think the equal weight's up about 5. And so I do think that, especially within software, the software ETF, all those stocks look identical from a chart, which tells me that there's a lot of opportunity there. I think also financials are another opportunity there. So I think there's lots of spots that people can go in, do their own work, and buy some individual names that have been unjustly, let's say, sold off and where fundamentals aren't meeting the actual reality that the stock is trading today.
We'll get through a bunch of the different sector moves because they are interesting today. I love the context that you put, and at times like this, context is more important than anything. The S&P's down 0.2% on the year. So we've run a lot and we've gone nowhere. What do we do as we look at the backdrop, what's happening geopolitically, and we realize that the story at home is still good? And until that changes, why would you react to something so far away, even as serious as it is?
So she brought up a phenomenal point there that I have to point out to everybody watching this right now, and I think it's a big thing if you want to make money over the coming years or not, okay? You know what it was? She said, what's your time horizon, right? What's your time horizon? If you think you're getting the best deal on stocks over the next month, the next 3 months, 6 months, complete gamble. Who knows? Who knows? Like, there's a million things that could happen. Maybe crude goes to 100. Maybe crude goes to 120. Sends a market down crash in the short term, right? Who knows? But if you have a longer term horizon, it's a great buying opportunity today. It's going to be a great one tomorrow. It was a great one yesterday, right? And it's phenomenal deals you're getting out there in the market. So what's your time horizon? My thing is I see a lot of opportunities out there in the market right now. It doesn't mean every stock's at a bottom right now. Although software stocks look like they've already bottomed unless the NASDAQ was to hit significantly more than what it's already been hit. But I see a lot of opportunities out there. And I have a long time horizon. I'm looking out years, right? And that's the way you got to look. It always bugs me when new investors to the market, especially young folks, get so impatient with these stocks and they're freaking out and they're panicking. And they're so like, brain frazzled. I'm like, dude, you have so much time on your side. Like, you're worried about, because you bought a stock and it's down, 7% since you bought it last month. And I'm like, you need to be focused on the next, double up of that stock over the coming years. Like, what are you focused on here? You're just focused on the wrong things, right? So anyways, yeah, your time horizon matters significantly.
So if you're asking me, should you panic and go jump headfirst into it?
No, I'm not asking you if you should panic.
No, of course not. Of course
that wasn't
okay.
the question.
So,
whether you should panic.
Okay, I misinterpreted. Of course, the market looks forward. The market has been through its share of wars and skirmishes and geopolitical events. And generally, if you look a few months later, generally, it's calmed down and something has reverted back to at whatever level we were previously. So this is another example where we have sort of an explosion, literally and figuratively, that the market goes into some sort of oh my God phase. But here we are, and it's a few days later, and companies are reporting, and Broadcom had good numbers, and NVIDIA and Jensen Huang talked about where they're selling their chips and what those chips will be doing, and the software stocks were oversold, and people are buying them, and the non-software or heavy-duty industrials, et cetera, were a bit overbought, and so people are selling them, and that's the way I would interpret it.
You kind of answered my question in a sense when you talked about unless there's some kind of oh my God moment. You think about what are those moments at times like this, right? Is it oil to 100? Is that okay, now you got to start thinking about the inflation picture, the ripple effects into the economy picture, and all of the ancillary things that would obviously be impacted by a spike in oil to that magnitude, the Strait of Hormuz being closed or ships actually being attacked or things that would change the calculus. My point and my question at the top is X that. Do you sit back and you say these are moments that have great opportunity along with them for long-term investors? Like ostensibly most of the ones who watch our program, despite the tactical nature of some and the various things that people do differently than some others.
For sure.
And this is why I love being an active portfolio manager, because I can get super granular right now. So I'll give you a great example. A couple days ago, we added 5 positions to our international, not 5 new positions. We added 5 positions from our international portfolio to accounts that don't own them yet. Because with international stocks collectively being up 40% over the last year and 3 months, we've been really hesitant to broadly just buy the whole portfolio. But you wake up one day and you've got stocks in your portfolio down 7%, and they're totally unrelated, and there's no real consequence from whatever does go on in the Strait of Hormuz. So we added Veolia, Honda Motor, Nordea Bank, Seki Sui House. And those are some great things to add when they're down 7%.
Did you tell our producers about all those so they can throw them
No, sorry.
up?
It was a couple days ago. I didn't think we were going here with international. So sorry. I didn't, and it was adding existing positions in the portfolio.
Well, I just want them to be able to put something on the screen that shows our viewers, because you ran through those so quickly.
You want me to say? I'll say them again.
Yeah, do it again,
Veolia, Honda Motor, Seki Sui House, Nordea Bank. Oh, and DHL was the other one. So it's nice to be able to take advantage. And then in the equity income strategy, I said, okay, who doesn't own Columbia Bank shares? Because that company is fine. So you can pick off and see where there's opportunity. But I like it too, in that you do have opportunities where, I mean, last year, if you look sector by sector, it's pretty bifurcated. This year, I feel like it's even more severe. So you've got consumer staples up 13%. You've got consumer discretionary down 4% on the year. Within all these sectors, there's enormous rotation and movement. Now, I'm not super heavy on the software side, but within the software space, if you know that space really well, like opportunities being created there. I can't tell you which ones are new and exciting today, but if you know that the way we know international, you can buy things.
I think some things are unanswered.
Okay, what do I think about international stocks, and then what are my favorite stocks in software? International, not a big fan. There's just so many opportunities in U.S. companies. So many opportunities in U.S. companies, it's ridiculous. And so, and if I want to play from an international perspective, I'll play a U.S. company. For instance, Wynn Resorts. Wynn Resorts, very international company, right? They have their properties here in Las Vegas, which attract a lot of international folks, right? But then they have 3 properties in Macau. They're building a property in the Middle East right now, and I know no one wants a piece of the Middle East right now with everything going on over there, but they're building that property as well. So if I want international exposure to wealthy clients, right, that live abroad, I think I like a stock like Wynn Resorts, right? And obviously a lot of the big tech companies make a lot of money from Europe or even from Asia in general, right? So that's my perspective on that. Usually it's not worth it. I think the only straight international stock I own, I believe, is Shopify. Aside of that, it's just, no. There's usually, the companies just aren't good enough, to just put it quite frankly. Now, in terms of my favorite SaaS stocks, listen. Salesforce, ServiceNow, Adobe, the same ones as it's been. Those is where I see the best risk-reward profiles out of that whole space. That's just my personal opinion, okay? I have been looking at a few of the cybersecurity plays as well. We'll see what happens.
At this moment, I think people can think that they know about software, but I would suggest to anybody who says that they know doesn't know, because it's almost impossible to know what the disruptive force of all this AI is going to be on software companies. Some are going to have a severe problem, and they're going to be severely impaired. Others may not. We're still trying to figure out who's who and which bucket each of these companies falls into.
I think within software, Robert Smith, who founded Vista, right?
Yep.
He's been there forever.
Yep.
He put out a video the other day. I thought it was very, very, very logical. And he made the point that, yes, is seat-based going to have to change, right? Because let's just take that as we're going to have less seats.
Yeah, less
with more
seats with more agents.
So then he would say, well, I think that because this does cost to do compute, we go then to a work-based, where you have now, instead of 10 people, you have 5. Those 5 people are doing more work. Guess what? That work costs money to do the compute. And then in addition, I think what's so fascinating is he said that less than 1% of enterprise data, like the data at my company or the data at Exxon or have you, is actually being trained inside of AI right now. It's really just the internet, and that's the opportunity. And I do think that, yes, maybe these software companies, the multiples going forward just need to be lower, right? They need to be lower.
Well, that's what's happening now, right? They're re-rating for a rethink on where the revenue growth of that industry is going to be 5 to 10 years from now. That's the whole point of
Exactly.
the pullback.
Right. And so the point is that I think the narrative does get a little disconnected to potential future fundamentals, because when you listen to Salesforce earnings, which once again, I bought it, I sold it, because I just can't get my arms around like these questions we're asking. But I do think when you listen to these software companies' earnings, they are still doing very well. And so if you put a lower multiple on them, they're not going to zero. And so that's where, like, I own a Zoom. I can get my arm around Zoom all day long. I think there's not that much downside. I think there's good upside. But you have to do that individually, because I said at the front of the show, all of those stocks, the charts look identical, and they're totally different companies.
True. Let's take a peek at Zoom here and see what's going on with Zoom. Remember when this was a darling? I think Zoom was like $500 during Rona. Let's see. So Zoom, yeah, revenue looks good. Slight growth there. Margins look good. Margins look really good. Overall, net margins have peaked up a lot for the company. Earnings per share, it looks pretty solid. Free cash flow looks good. Free cash flow per share looks pretty good. Operating cash flow looks pretty good. Operating income looks pretty good for Zoom. Let's see on a valuation basis. So 11 forward P on the stock, not bad. It's just not the most exciting one, right? Like, this just, I don't know. I would just much rather prefer somebody like a Salesforce and a ServiceNow that's going to give you much better growth in future years than somebody like a Zoom. Do you have to pay a richer multiple? Yeah, you do, but you just get such a substantial growth rate higher than somebody like a Zoom with a lot more products to sell.
As Jonathan Krinsky,
which makes them more diversified as a business model than somebody like a Zoom.
Forth the other day, is whether the software stocks that have been down a lot are washed out. And you've seen some stability in the space. As we know, the IGV is up 7.5% in a week. Cyber's having a great week. Palantir's up. Bryn was just talking about some SaaS names like Salesforce. Snowflake's up. We've watched ServiceNow. All these names that we have talked about on such a consistent basis, and frankly, most of it negative. Is it bottoming, do you think? Because Microsoft, if you want to throw that in there too,
sure.
Look at the chart. We show it every day, pull a year.
So this is exactly the question that we felt would be important to answer. Let's compare the old economy stocks that have been surging with the new, I'll call it the new economy stocks, even though Microsoft isn't new, but including some of the others. And we have a chart here that shows that the current, this is old economy stocks, and I had a bunch of them in there, names like Caterpillar, Deere, Emerson Electric, Flowserve. This is where the forward PE of these stocks were the group. The average was 30 times, and giving them the benefit of good earnings growth, we look at 11+% this year and 17+% next year. Then we looked at how are the new economy, the software stocks, such as where are they trading? 21 is the PE. So these stocks have come way down in PE and their growth rate. And these are numbers that I reduced from estimates that we had been using, and they're still growing faster than the old economy stocks. So I don't know whether the run-up was too much, it certainly was fast, or the run down too much. We know it was fast, but it appears to us that there is now this sort of disequilibrium where there's too much buying in these stocks that are cyclical, really.
Yeah, so, just to be quite frank, that, those stocks, those old economy stocks should not be trading like that, right? Now, another factor here is, looking at somebody like Microsoft, right? You're getting the stock for very cheap compared to what you have had to pay. I mean, everybody got very accustomed to paying a 30+ P ratio for Microsoft, and now you're getting the stock in the low to mid 20s. So that's very intriguing on Microsoft. And they still have great growth at that company, like great growth. So, forward P23, that's very fair for Mr. Softy. Very fair. Now, where you get into trouble here with a stock like Microsoft is you have to say, is that your best opportunity. And this is where the compare feature on 1000xstocks.com comes in. So we're going to compare Microsoft to Meta, and let's compare it to somebody like an Amazon, right? And this is where you start having like, is it this stock or this stock? And that's why I love the compare feature here on 1000x. Once again, if you want access to this, that will be the pinned comment down there. Click on that and apply to join us in there. So forward P on Microsoft 23, but look at Meta 21. Meta, meanwhile, has very, very strong growth. Like, look at current year expected revenue growth. Meta's in the, mid 20s, roughly, low to mid 20s, when Mr. Softy's at like a 16% number. So that's where you get into like, would you rather really have Microsoft, or would you rather have somebody like a Meta, right? I would prefer Meta for sure. And then you look at somebody like an Amazon, that it's like, okay, higher forward P 27, but Amazon has a lot of room. I think they have the most room to raise earnings per share over the next, 5-10 years than even a company like Meta and a company like Microsoft. So that's just something to kind of keep in mind there, okay? All right, guys, appreciate you joining me. As always, thank you for being subscribed to the channel. Thank you, everybody that smashes that like button. And once again, if you want to apply, join a private stock group, private wealth group, get access to 1000xstocks.com, private Discord chat, exclusive weekly videos, all my course curriculums teaching you everything I got up here so you can take your game up to a much higher level. That will be the pinned comment down there. Much love and have a great day.